Tuesday, January 21, market analysis, Stan Ehrlich. Yesterday, I did not do a YouTube because of the partial market holidays. So a little bit of catch up today. Some of the futures were open yesterday, not all of them, and stocks were closed. But indexes, in some cases, mostly, were trading. So here we go. Yesterday, we had another up day, higher high, higher close, higher low. Today, we had an early break during the day that came down and tested the previous bear trend line we broke above on Friday the 17th. So Monday the 20th, a little more upside progress. This morning, back down to the line almost exactly, classic technical analysis, and all the way back up to a new high where we are right now. This is very strong, but wait a minute. I always get cautious when I hear somebody say, wow, look at it go. It's super strong. And that's all after the fact or current. Tell me the future. We're getting close to getting overbought, but not quite there. So there does seem to be likely upside potential here easily. And I would expect at least a move to 6109. And then maybe if we're overbought, which we could be, or very close, we'll have a flip-flop back down again a little bit. The key here is to not close below today's early in the day low. That I think maybe even happened late yesterday afternoon, but that's not the point. Early in the session, which is 23 hours long. So love it, bullish, been that way for a little while now. Last low, oversold, basically the bottom of this wedge or downward slanting pennant, same thing. And up we go, 1, 2, 3, 4, 5 days out of 4 days out of 5 out of 6, excuse me, so far. Good run. But again, we're getting close to overbought. I would not be a buyer at these levels. It's getting a little overdone, and we're probably going to be at these levels or lower, maybe by the end of the week, which would be a little bit better buying opportunity. But I'm well aware it's frustrating to see markets go up when you're not in a trade and you wanted to be, and you just can't let yourself not have any disciplines and be reacting to emotion and all that. That's the worst thing in the world for traders, period. Being caught up in fear and greed and emotion, stuff like that. So, wait. Next, we got the 5 minute. Yeah, we got the 5 minute chart doing great. New high ground above the high of the last several days. Coming along just fine. No problem. Next, we've got the daily data on the SPY. Now, we do have 2 gaps to close, and this could be a very useful tool in the near future, meaning in the next several days to maybe even a week or two. But coming down and closing this gap, which would be down to about 594 and a quarter, it would be classic gap closure, and for the spider, a test of the trend line, and for the E-mini, probably a test of this sharp break we had earlier in the session, meaning yesterday afternoon. So there's that little problem with some of these indexes were on vacation, closed yesterday, and some weren't. So I do look for a minor correction, but not necessarily immediately, maybe in a day or two. And for the spider, 594 and a half-ish, something like that to close the gap. Okay, SPY, spider, almost a new high for the session, and we're looking at a test of some resistance areas just a little bit higher. But I think it can continue to work its way up some. And here are those 2 gaps, lots of support area. But here's the first and lowest gap down here. And here's the second one. I didn't put a little yellow zone horizontal bar in there yet. But it could come down to, 594 and a quarter-ish. Next chart. No gap on the QQQ, except for several days ago. New highs, looking good, not overbought. None of these indexes are overbought on daily data charts. So they're getting closer, which implies that you're probably a little late to be on the long side of the market. And you might even get a damn good sell signal before it bottoms out and goes back up to new highs again. But that remains to be seen. I like what I see. I'm bullish on the indexes. No ifs, ands, or buts about it. How high is it going to go up? How long is it going to take? And at what price is it going to be likely to stop? For the triple Qs, first level to stop at is 528, not too far up. Not much above that is 531. And then, of course, the highest high for the bull market so far. So those are a couple, three levels at which I would expect it to stop at. Frankly, the first one, 528-ish, looks to be the most likely at this particular point. Next chart is the QQQ 5 minutes. And up and up, up and away we go. Looking good. I don't have a problem with this. Nothing seems to be wrong here. Next, we've got the NASDAQ futures and almost a new high. Probably will do the job. Nowhere near overbought at 63. Remember, my overbought 75, not 70. Now, both George Lane and, well, that's not necessarily true. Wells Wilder used 70 for overbought and 30 for oversold. I use different inputs and parameters for my custom RSI as well as displaying, letting you see the numbers differently. As opposed to a line chart, I'm using a high-low last type of display. So it's the same, but it's different. And I also color, which Wells didn't have the opportunity to do way back in the 70s and 80s with the software developed, not as much sophistication, of course, as today. So colors, the way it looks, and the way it acts, but the underlying fundamental formula is approximately the same. Next chart. NASDAQ 5 minute, looking good. Probably about to pop in a new high ground totally very soon. YM in new high ground. Now, I do want to point out the YM is the closest to getting overbought at 73 already. So it's not going to take much for the YM to get into overbought territory at 75 or higher. Maybe even today. Darn close. So with an outside trading range today, and if we get above 75, we'll have the makings of a possible bass backwards that supports the expectation of some sort of a dip I've been talking about in the other indexes. Hard to say when for the other indexes, but this could be of some help. We'll have to watch the YM very closely. Here we go with the 5 minute YM. Looking good. No problems. What about the Russell? Well, the Russell is almost at the new high ground. Probably is going to make it like the YM, but we're back up into this major, wide, big resistance area, the yellow zone. So it has lots of elbow room on the upside before there's any major, gigantic, long-term above 2,500 bullish breakout. That's going to be bullish for months and months to come, supposedly, when we start closing above 2,500. Well, we're nowhere near it. So I think we could have an outside up day today. Normally that's bullish, but remember, we're very close to overbought, which changes the situation. So I'm bullish, but a little bit cautious, especially if we do get overbought. Now, the Russell 5 minute, looking good. Not a problem. Like what I see. Bonds. Yay! You realize that we bought the exact low tick on January 15th, the day after we have a bullish engulfing ER buy signal, and that's the green candlestick. Now, these are custom colored, so the green means it's a buy signal, and when you see the red ones, they are sell signal. I don't have anything showing as far as red is concerned right here. Interesting. You'd think I'd have in all these few months here some red ones. There's a couple back here. Okay, so those are sell signals, hopefully on rally highs, and hopefully at very profound price levels as well. Now, this buy signal just a few days ago has a lot of profound potentials to it. January 14th, just a few days ago, created a potential broad double bottom relative to the low that was made on October of 2023, which was also a bullish green ER buy signal. Look at the result of that buy signal. It just went up for a couple of 3-4 months, about 3 months, I guess, a huge amount from about 10, let's pick the middle of it, 109 up to 125-ish in about 2.5 months, something like that. Now, I am implying that something like that might happen, but that's a far stretch. I mean, it just happened a couple of years ago. And a double bottom would look great with another sharp, big rally like that into, say, March, way up to 126. I'm not ruling it out. I can't come to that conclusion, but we've seen it happen. All I know is I got a buy signal on the low damn day, and the next day we got an ER3 scalp and overnight trade smack at the exact low tick on the opening. And this is what the code is meant to do. It opened below on my bid for 3 scalp and 3 overnight. Got the low, I think it was 110.20, 110.30. On the low of the day on the 15th of January. And the green dotted line represents the scalp trade inside a trading day. And the green line we've got right there represents the overnight, bought at the same price. Here's our trailing stop, the yellow line. I tightened it up this morning from an older number that I thought was too loose. And now it's automatic and it'll trail the market up. You can adjust it occasionally if you want, but I don't necessarily encourage that. New high. Looks like it's going to have a new high close. Looks good. But it, again, is getting a little bit close to overbought. What about 10-year notes? We didn't get a signal at the bottom, unfortunately. But it's doing the same thing. Broad double bottom with a buy signal on October 23rd of 23, like bonds. Unlike bonds, we didn't get a signal just a week ago. Close, but, no cigar. Now, almost a new high for the last few weeks, coming super close, not quite that close to overbought. A little bit more elbow room is quite potentially likely, and I'm expecting it to probably stall out for a minor correction. I'm thinking 109.5 to maybe 110, 109.5 to 110, somewhere in there. Minor correction, and then up to the resistance area of 110, let's call it 111. That's good enough. Yeah, 111 to 111 and a half-ish. Looks good. I like what I see. Next, crude. Topped out an overbought condition at a resistance area, classic. Has come down now nicely for a couple, 3-4 days. I'm looking for a test of the previous bear trend line and a move down a little bit more than that. Is this out of position? This is out of position a little bit. There we go. Yeah, and I think I need to make adjustments to some of these other circles, but that line is now good. So coming down to support area, which also probably needs some adjustments. I see what happened. We changed contract months, but the lines and the annotations didn't shift appropriately, and that's typical. So coming down to about 173.10 is my expectation, and then, well, we'll see what happens. We're neutral on RSI, so that's not giving us any help at the moment. Next, topped out of resistance also in heating oil. Great. A new high for the move happened yesterday in resistance, overbought, and turned around and darn near had a bearish engulfing, which would have turned the price action red, like this one back here, which was a fantastic top for a month, almost a month. So we didn't get it, but close. And we're dropping off like a rock today. New lows for a few days, quite a bit of a break. I'm looking again for a little bit more weakness, not necessarily a big break. Two levels to look for would be around 2.449-ish, which is not much below the low already made today, or, and it looks a little more likely, all the way down to about 2.315. Yeah, that looks a little bit more likely. And then we'll see what happens. Next, natural gas has a brand new today happening as we speak. Bearish engulfing ER sell signal. We topped out in resistance and overbought conditions, almost reaching the minimum upside objective for a head and shoulder bottom, my favorite pattern. And that pattern said we were supposed to go up starting on December 23, because that's when the breakout took place. Actually, the day after. I can move this over one bar. It doesn't matter. There we go. So it can't. Whoa, 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 whoa. Hang on a second, ladies and gentlemen. I'm sorry. I think there was a little mistake made here. Ah, boy. Yep. There's going to lower this line just a hair. It goes from the lowest low of the formation on November 4th up to the neckline. That's your measurement for how far up it should go once it closes above the neckline, which was on this day right here, December 24th. Now the upside objective has been fulfilled, accurate as hell. Great. I thought it just came short of it a little bit, but that's not the case. So we have fulfilled the upside objective in overbought condition at a resistance area and topped out. Now, after being overbought a few days ago, we have a bearish engulfing ER signal, official. This should be the beginning of a move down. I'm thinking back into the same trading price range where it was, maybe down to 2.4. Now that's a stretch, but at least down to 3.3 and maybe below that. This is a brand new sell signal. Now it's not on top of the market, the high day, but the legitimacy of the signal should be as good as the others. Next, we have a higher high for the move now on gold. This is precious metals. Gold, silver, platinum, and then copper. Copper's doing great. And new high. Looks like a new high close, probably. Not quite overbought, but at some resistance from previous highs. I think we're close to a minor high. I wouldn't be buying at these levels. That's about the best I can say. Some resistance up in here. I didn't put any rectangle on the screen. My best guess is about 27.83. Next, silver hasn't gotten overbought. Looks like it's about to break a major bear trend line. Gold's already done that. Back to gold. You can see it did that a few days ago. Back to silver, bumping up against resistance of 32.4 and maybe even as high as 33.5. Seems to be likely for silver very, very soon. This week and next week. Platinum. Outside up day, normally just plain bullish by itself. Japanese candlestick, bullish engulfing. But no ER buy signal because we weren't overbought within the allotted number of past days. So I'm friendly. Major support held in a very wide range for many, many months now, going back to at least October, if not maybe even further than that, of 23. Yep. So a year and a third, something like that. Look how many times it came down into that price range and eventually turned around. But it didn't get a bull market started that lasted a long time. It ended up topping out, and two of these major highs were ER sell signals right on top. It's great. Next, high-grade copper did provide a sell signal just last week on Friday, came down on Monday, and has come down even further today at the lows, making a new low. Right now, we're a little bit higher for the day momentarily. A little discrepancy, probably because of the holiday stuff about the net change and the little marker I've got. But we are short. ER1 overnight from the signal day. Yellow line is the trailing stop. Looks good. I'm thinking it could come down back again to 4.08. Why not? We're not anywhere near oversold. That's exactly what I'm thinking. Next. Now, grain markets. There are mounting reasons to believe that the grains, beans, oil, meal, corn, wheat, may be having a very big, long-term, many months to come bottom. I've talked about this a couple of times in the last many months, maybe half a year to a year. And we have now new highs a few days ago, got overbought, had a little bit of a pullback couple days, came back exactly to a previous bear trend line, stopped cold turkey, and rallied again on Friday, closed yesterday for beans, and popping up quite a bit, 25 cents today, and looks like it's going to have a new high close, but I want it above the high of the 14th of January to be a little bit more bullish. And that could very well still happen. I'm liking what I'm seeing. Now, what about the bigger picture? When December 19th occurred, we were oversold and making new highs for years. But all of a sudden, there's no downside follow through. The market jumped back into the same trading range that it was before, and dribbling for around for a couple of days, started to make more bullish gains and new highs for a while. Minor pullback, didn't do any damage, and kaboom, it exploded up to the bear trend line, went right through it, and here we are after a little bit of a dip. New highs almost, new high close likely, well above the trend line, yes. No resistance immediately above. We're not overbought, again. I think we're about to make new highs. And if we can start closing above 1080, let's call it 1082. I'll be more exact. 1081.75. Then, and that's the high that was made on September 30th. Then we have a double bottom formation, upside breakout. And I will put in a little line that should be pretty accurate, all the way to about a few days from now. So crossing this line on a close is going to start to produce a upside objective of around 1190. Damn good move. And start to have people talking about a long-term double bottom from August of 24 to December of 24. About a 6-month bottom. Very normal, on the large size slightly, double bottom size. I love it. It's looking good. I'm getting more and more technical evidence that grains are starting to do well on an intermediate to longer term basis. That's beans. Comment about soybean oil. Head and shoulder bottom formation. Running up very sharply last week. Having a little bit of a dip from resistance and overbought conditions. Starting to work its way back up today, approximately unchanged, down a few ticks at the moment. I like this progress. Now, it could dip again, but not very much, I don't think. But the point is, the pattern looks good. The neckline is way up here at 50 and 50.50, basically. And we're at 45 and a half, so it's not, maybe a week or two. Going to be up to the neckline. And if that neckline is broken, we will have seen new highs and new high closes for approximately a full year. That's not bearish. And it's a break of a bottom formation breakout, neckline break. So the upside objective on the pattern, if it all works out in the end, is 6130 or more. Remember, these objectives are minimum from price formations, and that's exactly what I'm expecting. Now, there's some resistance levels, obviously, in the way up. I'm just pulling all of the little markers over to the right here. So it's an ongoing maintenance thing. I'm bullish. I like what I'm seeing. There's nothing wrong with this pattern. We got a buy signal almost on the damn low day on the slash shoulder. We got a buy signal near the bottom of the head of the formation. Unfortunately, the first shoulder didn't have one. We got a sell signal smack dab on top to create the pivot point for the neckline. Great. Okay, bullish, quite a bit so. Intermediate to long term. Short term, it could bobble a little, but should in the next week or two make new highs. Next, we are doing something similar in soybean meal. Major historical support zone, triple bottom formation, not a head and shoulder, overbought conditions at the bottom, and almost a new high, maybe by a tick, probably not, but a new high close potentially for about a week or so. And I would not be surprised to see it shove itself up to 321 very quickly here. And closing above that would all of a sudden be a new high since the late October. So you got November, December, by about 3 months. Triple bottom, minor upside breakouts coming, in my opinion. Nowhere near overbought, plenty of elbow room. Boy, I'm liking what I'm seeing. And did it just tick into new highs? I think it did. Just that moment. Yeah, I think it made a minor new high here for the last week and a half or something. Real time. Good. All right. What are we looking at here? Corn already. Head and shoulder bottom formation. It had a false breakout December 11, but had a legitimate upside breakout on, let's call it December 24th, Christmas. And even though we had a bearish engulfing air sell signal, it didn't really work. The next day, it obviously got broken. So that's very bullish because sell signals normally have some downside follow through. And we didn't. That's actually should be a copy and pulled over slightly because there's another one right there. And pull that up a little bit. There we go. So that's two almost back to back. Like the two at the bottom, almost back to back. Twins, double twins. Anyway, the minimum upside objective, ladies and gentlemen, is almost here, 495. If you didn't do anything when I talked to you about this head and shoulder pattern around Christmas, well, what can I say? So overbought, not too severely, but definitely. So we just might get to the objective in the next day or two, real quick. Then we're likely to see it pull back down after hitting some resistance also. What about wheat? We've got a possible broad double bottom in wheat. And today it is making new highs for a month. I've got a lot of bullish comments about these grains all of a sudden. They are looking a lot better. And they are long-term bullish commentaries. I don't get a chance to do that very often. Normally, I'm a short-term analyst in general. So what do we got for cattle? Overbought, minor, tiny double top over 4 days. Little bit of a dip here. Probably will come back down some more. RSI is back into neutral territory. It's hard to tell where it's going to turn at this point. I think the dip down could be at least to 194, and it can't rule coming down to 191. But intermediate to longer term, I'm still bullish. Short term, it looks like we could have a little bit more of a dip. What about Miss Piggy? Well, coming down to support, getting closer, much closer to oversold, should cause Miss Piggy to challenge 85 and a half, a previous low a few weeks ago, in a support area, and probably turn around from a little bit lower. So I would be getting ready for a potential buy signal and reasons to be a buyer. Plus, we do have this downside objective, which is all the way down here at 8170, because of a head and shoulder top, my favorite pattern, which has broken out classically on December 10th, reacted back up to the neckline. I'm sorry, that's not the right line. Broken out, on December 30th, classically, with a big downside move, heavy volume, new lows for weeks and weeks, classic breakout, got oversold, had a rally back up to the neckline. Again, textbook classic head and shoulder activity, and now making new lows. Love it. So my forecast is down to 81 and a half, 80, let's call it 82, a little bit below. And it could be within a week or two, maybe even a little quicker than that. And for some reason, I'm not getting a quote for today on SQ, the stock. I'll have to figure that out and get it going for tomorrow. Back to the E-mini, new highs for the E-mini, outside up day, closer and closer and closer to overbought. You guys have a great day. Profitable trading to you.